Let's get some hot picks. This time it's fast food, and we are joined by Andrew Charles, Managing Director, Restaurant Analyst at TD Cowen. Thank you very much indeed for joining us. Let's jump right in. Cava Group attracts you, CAVA in New York. What's the attraction here, please?
Hey, Andrew. Great. Thanks for having me. So on Cava, this is the name under our coverage. And for folks in Canada who may not know the concept as well, it's a fast casual Mediterranean. So think of this as a Chipotle that serves Mediterranean food. So vibrant concept, vibrant category, as well as the fact that there's a company that we feel very confident will be able to beat and raise when it comes to EBITDA as well as same-store sales this year. We've seen a tough start for the restaurant industry in 2025. We think this one's immune from it with an improving unit economic story longer term and a long runway for growth in the U.S. that makes us very bullish on Cava.
So when you say it looks like it's with a Middle Eastern slant here.
That's right. Yeah. So it's the Mediterranean category. So mostly on Greek food, but, expands the Mediterranean. And so, you see interesting things like spicy lamb meatballs, tzatziki sauce, crazy feta that really differentiate this one versus the peers. And it's a cuisine that, frankly, is hard to trade down to in the United States, as well as hard to replicate at home, that we think gives the business a moat.
Yeah, spicy lamb meatballs, and they got spicy lamb with avocado. I'm getting hungry here. Dutch Brothers, what are they all about, please?
Yeah, so Dutch Bros is the third largest coffee shop in the United States. And so what it is a standalone drive-through. There are picnic tables, but there's no lobby, there's no interior. So the ROIC quite high. Brand is very portable too. They're starting on the West Coast of the United States and expanding eastward, where they're seeing improved ROIC, improved unit economics as they expand. That's really fueling the growth. And so we like this story as a positive sales revision story to help gain multiple expansion, really as they implement some of the key drivers within the coffee shop industry. And what I mean by that is they just launched mobile ordering across their fleet in the third quarter of last year. That's still a small part of their sales. It's only about 8% of the business today. You compare that to Starbucks at 31%, long runway for growth, what we believe to be a very incremental occasion. If we fast forward, beyond 2025, that we think will be dominated by the mobile order story, food is going to be a key driver in 2026. And so right now they're testing an assortment of different offerings to include. They believe they're missing a market or a consumer here that wants something to eat with their coffee purchase. So big opportunity as well to continue to make this a positive sales revision story, not just for 25, but also for 26. And if I can go one step further, we're bullish on coffee as a category. We talked about Mediterranean category for Cava a moment ago, but the coffee category, what we're seeing in the United States is an aging consumer. And our survey work suggests that consumers drink more coffee as they age, particularly when they go from the 18 to 24 cohort to the 25 to 39 age cohort. Entering the workforce, entering parenthood leads consumers to drink more coffee. And Dutch Bros is the concept under our coverage that our proprietary survey work skews perhaps the most, to that 18 to 24 consumer. So we're pretty bullish that as their purchasing power picks up, as their caffeine consumption picks up, this is going to fuel a great long-term story for Dutch Bros.
And I think you said they don't offer seating. And I've seen a few Starbucks outlets that are the same without seats. And Starbucks is a stock that you think is a decent bet right now as well.
Yeah. So this coffee theme also helps Starbucks as well. And so you're right that Starbucks, about a third of their recent development has been this drive-through only prototype. They totally get the maximized return on invested capital this has. They recognize that, even in their existing stores that have a drive-through, it's a very powerful channel to have. So you're absolutely right, Andrew. They are starting to focus more on drive-through only concepts throughout the United States. And within Starbucks, as you mentioned, our number 3 pick, not only are we bullish on this coffee tailwind the concept should be able to benefit from, but the new CEO they brought over from Chipotle is a Hall of Famer. We're really excited about the opportunities he has to really implement the Chipotle playbook at Starbucks. So think of it as better operations, better speed of service, as well as better marketing as well for a brand that historically didn't focus much on advertising. We think there's a lot of low-hanging fruit that'll help support him in his turnaround journey.
Yeah, it is interesting that, coffee, just before we let you go, it is fundamentally a very high margin product, isn't it?
Absolutely. And I think one step that's also really important here, younger generations show higher proclivity to get coffee outside the home. They also like iced coffee too. And we believe that not only just the iced coffee, which is harder to replicate at home, when you think about most of the at-home offerings, they're geared for hot consumption, and iced is really the clear growth trend. Combined with all the digital innovation you've seen with loyalty programs and mobile order, we think there's going to lead a lot of stickiness here for the coffee shop channel.
We'd better jump. Thank you very much indeed for joining us. Andrew Charles.